Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets next week, where we look at the stock market analysis on what happened the last week and how we can look for a better trade plan for the next week. So remember, this is January 17th, Monday tomorrow. So that's what the analysis is being done for. So if you're not subscribed, please subscribe and share to friends and colleagues so that it benefits all of us. We have very few subscriptions, by the way, so it keeps us motivated to continue to do the things in next week's as well. Thanks. So without wasting much time, so basically we would be looking at the price action, the momentum, the trend, right, and the volume, and then we would have some actionables also for the next week, right? A real trade that can possibly be taken, right, based on the analysis. So let's deep dive in the price action first. Look at the candle, the weekly. What you're seeing here is Nifty, Bank Nifty weekly has got a very wide range bullish candle that is formed, and that's with a gap up. Same gap up is found in the Bank Nifty as well, and but it's not. It's a different pattern. That is, price action seems to be open is equal to low. That's bullish pattern again, because the open and the low is the same, right? So it looks it's powerful, and there is a gap up also, weekly candles you see. So it's a wide range bullish on the Nifty, and open is equal to high pattern on the Bank Nifty on the weekly basis. So look at the daily what happened. So this is the 5 days 3 plus. There is a big gap on Tuesday, and so this is the price action in the Nifty. If you see, it was continuous upon, trending upon with a gap up, very bullish, clearly seen on the daily, daily time frames, 2, 3, 4, 5 days above, you can say, right? At Bank Nifty, remember the Nifty had taken a pullback in between the previous week, not this week, right? The previous week it had taken a pullback, and then the change in polarity had taken shape, and the bounce happened, and then that's when the big move again started, right? Now look at the Bank Nifty, what has happened, right? So that similar kind of a pullback was taken this week. If you see, the last 3 days was kind of a pullback, and then you can see that it has settled at a previous support zone, right? So wherever the previous resistance were there, now is acting as support. That is what change in polarity. So change in polarity that occurred in Nifty earlier weeks is now happening with the Bank Nifty, and the hammer pattern on the Friday shows that it is indications of further up move. So this, any candle that is above this current latest candle of Bank Nifty would indicate that it's going to be further up move again. That's what the daily candles are indicating on the Bank Nifty. Now Bollinger Bands is something that we use to understand the volatility expansion or the contraction. So you can see clearly that the Nifty and the Bank Nifty both are showing expansion of the volatility on the upper side. That means the price action is towards the bullish side. And walking on the bands may still be there on the Nifty, if you see there, but walking on the bands has taken a slight pullback away from the band of the upper. You can see a slight pullback on the Bank Nifty that has happened. And coming to the support and the resistance levels, these are very crucial if you're going to take a long or short positions, or you're planning to put your stop losses, or you're planning to unwind your positions, whichever it is. Support and resistance also very. So this is based on pure price action is what these levels are put. You can put that based on Fibonacci levels. You can put that based on I have used Fibonacci also to some extent, right? So the price action level that markings can be done based on any of these techniques. You can use a trend line to mark it. You can use a Fibonacci level. You can use basic support resistance. You can use change in polarity. You can use a number of techniques to identify the support resistance. So I identified is with Fibonacci and the previous support resistance levels. I just marked it. So make a note of these levels. See, right now it is the first support would be 18,100, right, where it has taken and bounced from. And if that breaks, we have 17,950 to 18,000. 18,000 is going to be the next support. And after that, you have back to 17,800 to 17,850 levels. And right, these are all previous swing low levels. Right now, the upside, what you see is the resistance first will be take out and or hold on with the 18,200. Right, and if 18,200 is held, and then above that you have 18,350, 18,400. That's going to be there. And after that's 18,500. That's kind of a rounding. And then 18,600 is the all-time high level. So there's going to be a lot of resistance upside bias. So right now You have one resistance that you see 18,350-400 range is going to be a good resistance, and above that 18,600 also all-time highs will be a big resistance to take out if the Nifty is has an intention of moving for the upper side. Look at the support resistance of the Bank Nifty. As I said, there is a change in polarity chance here. There is a potential for a move. The hammer pattern of the last pullback shows that it can form a change in polarity and bounce up. Right. So right now you can see that the resistance is seen at 38,350 to 38,500, that range. And after that, if the previous the three candles back, 3 days before candle, that is a high in the recent swing high, if that is taken out, then you may face again resistance at 38,900 to 39,000, rounding number, and 39,100 to that range, right? And if that is taken out, then 39,300 to 39,500, right? And then above that you have 40,000 and 40,200, which is all-time high kind of levels. So that's how the resistance to the upside goes. But support, it will be 37,700 to 37,800. It's going to be the first support if it goes below the candle low of the previous Friday's candle, right? And below that you have 37,300 to 37,400, which is Fibonacci 23 level also. Now for the down below 36,900 and 37,100 is also a previous swing lower resistance zone from where it broke out, so that's a good support zone. Below that 36,300 to 36,700, which is Fibonacci 38% of the retracement. So these are all levels that can act as support if it is falling down on the Bank Nifty, right? So make a note of this, rewind if you are not clear, and then mark those points on your charts as well, right? Based on what you see there. Now the next part of the analysis would be the momentum and the trend analysis. Momentum is bullish clearly on the daily, weekly, and monthly on the Nifty, that's for sure. Bank Nifty, the momentum on the daily is good. It's excellent. So the bullish on RSI above 60. Now the weekly is still yet to catch up with the momentum. That's still in sideways. That's the only concern. That's not even a concern. It takes time. It's the pullback, and now the pullback is going to make a change in polarity, bounce upward, means obviously the momentum would be back in good shape, right? Monthly also in bullish. So weekly momentum of Bank Nifty, that's medium term. Short term is bullish, long term is bullish. Medium term momentum of the Bank Nifty only has to slightly catch up. Otherwise, momentum is great for both the indices, right? Now, as we have been speaking about this for bullish divergence that is seen in Nifty, Bank Nifty also slightly diluted, but it is seen. The momentum, the reverse divergence of the Bank Nifty and the Nifty seems to be working in progress, and it has not met the target. It is longer to go up, right? Still, look at this. Right? Actually, yes, it has met the targets. This divergence is the bullish reverse divergence of the monthly. It has actually met the divergence targets. The target will be the high of this, high of this curve that you see here. So it has actually met the divergence. So it's going beyond that. That's what is happening. So trend indicator ADX, if you see, let's look at the momentum on the short term. So this is a daily momentum that you can see. You can see that clearly it is bullish. Here also clearly bullish. It's not over. There is no divergence that is seen on the daily short term. Neither is there in the weekly also. Right. So it had a diluted divergence on the daily. You can see that 15 bar 1, and it has already met it long back the targets, right? So that's about the momentum analysis. Now the next thing that we need to look is trend. The trend indicator we are using is ADX, DMI plus and minus, directional movement indicator, right? So that indicates clearly that it's a bullish trend on the down, on all time frames. It's bullish, right? Weekly bullish, short term bullish, and long term also, monthly also bullish. So, and short term, the strength of that, strength of the trend, which is indicated by this green, is showing that it is clearly rising up. So other places in the weekly and the monthly, it's not seen rising up. It is, it takes some time for that trend change to complete, but trend is clearly bullish. Momentum is bullish. Now, coming to the open interest analysis of the data, right? It is showing short covering build-up on the Nifty. Short covering is sometimes more powerful than build-up. So long build-up actually. Short covering is people who think they will go short, who are bears, suddenly now turning to save their position. They're taking long positions. That's short covering. That's what's seen in the Nifty. But that Bank Nifty, if you're seeing that, it's a short build-up. That is the latest futures open interest data is showing, right? So futures open interest data shows the build-up on the last Fridays really. So you don't need to be too much serious on that, but what is mentioned here is actually there's a mistake here. Here it's a short covering that is there, making out of that long, futures open interest rate of the Nifty is short covering, right? It's bullish, right? So there will be panic and then people go long and it will become a long build up basically. Right? Now open interest data for the Jan 20th weekly expiry charts, if you see, right, the put call ratio is 0.98 and 0.84 by Nifty, 0.98 for Nifty, right? So it's kind of near to the bullish zones, you can say. It's not bearish anyway, right? So that's what the open interest data is showing, right? And making all of these levels, right? So 18,200 is where the highest put writing is. 18,000 has got equal good number of put writing that is there. And look at where the resistance is written. The highest resistance is seen at 19,000. That means the market is crazily bullish. 18,200 has also got a substance. That is where the currently the market is, right? That also has got good enough of resistance. 0.98, we already saw that in put correlation. So it's bullish all the way, right? Madly bullish, you can say. 19,000 is the highest rating. So we're very close to that. Probably maybe take it out in a week's time. Never know. Bank Nifty 38,000 is what the support is first, and after that you have 37,500 with the maximum put writing is seen. So call writing, just look at versus 38,500 reasonable, realistic, and Bank Nifty 39,000 is also got good amount of call writing. That is the 38 and 39 would be the zone where the action may be happening, right? So breakout may be about 39 for sure. 0.84 put call ratio we are seeing is bullish, right? So it is a long build, it is a short build up here. It's a mistake, like making out of the mistake. It's a long build up that is happening. Like that's about the open interest analysis. Now VIX, if you see India, VIX has fallen down 12% last week, cooled off. As the VIX cools off, market rises. Now implied volatility is 14.64, cooled off. HIV is 10.46, so that is IV is greater than that for sure. IVP is low. It has fallen down from the 60-70 ranges to 29.76. It's falling down. IV is cooling off, right? But it's well within the range of the India VIX. If you see, it's between the 15 and 20 where it was hovering out since last couple of months. Open interest data, what we chose, just what you saw just now, can be seen here. You can see that this is 19,000 is the highest resistance. Probably those are hedge positions that you'll get clarity in the next first few days of trading. Will come to know whether it's a real bullishness that you see in this call writing or not. Similarly, see this, right? 38,000 and 39,000 is where the action is going to happen, right? Well, so Bank Nifty support is clearly required for the Nifty to move further out and break out from the all-time high for sure, right? So that's open interest analysis charts that we're seeing. Now let's look at what are the different industrial sectors, how they're performing, right? IT sector clearly had a green close last week. That's at 2% of. Oh, there's a mistake. There's no bull trap. It's a mistake again. 2% of up that happened, and short and medium term momentum is in the bull zones, and this is the time to get into the IT stocks, right? If you can, if you believe in the momentum trading, right? FMCG is closed red. The only sector that closed red last week, it's 0.70% down, and the daily and the weekly momentum also is not in the bullish zones, both of them are sideways, and then you just have to wait before the momentum catches up, at least on the short term, before you can do something about that, right? So metals closed green, 3.5% up. Daily and weekly momentum is bullish. Stocks could be picked. So metals turned bullish, right? Last week. Metal and IT is now turned bullish. What else is bullish? Auto sector also 3% up, closed green last week. Short term, right, is bullish, long term bullish, and everything is bullish. So auto, metal, IT, we have bullish moments. Pharma closed slightly up only. No big move, 0.75% up. So momentum is still short term and medium term. It is sideways only. So stay away from it. It will catch up. Reality short of 4.7%, big move, short term momentum, but continues to be sideways. We just have to wait a little more before it catches up back. So right now what we have bullish on is IT sector, auto sector, metal sector. You can blindly go on momentum trading, pick up stocks from this sector, right? That's what it is. Wherever the momentum is there, pick stocks from that sector only. And if there is down momentum, have tight stop loss or don't enter. So 3 sectors for you next week. Now comes the institutional participation. The foreign institutional participations have sold actually 4,000 crores last week, right? They did little buying in between, but they actually sold, but selling was less. Right? It used to be 10,000, 11,000 kind of selling used to be there in previous months, but selling is, but domestic institutions has bought to balance that 3,600 crores. Right? Net longs on derivatives, Fyers, that remained flat, you can say, net longs on the derivative side, right? But it's kind of big selling has paused, and that is itself is a big relief, right? And domestic institutions as usual is continuing with the buy. Now, looking at the global markets last week, the Nasdaq, the Dow Jones, and all of these recovered after a big fall that happened. Right? It was a bearish week, small body. It was bearish actually, basically for the US market, but there was a recovery also that happened. And finally, a small body formed in all of this indices, which drives something on the market US. Now, dollar index, if you see, it has closed at 0.5% down, 0.50% down. Dollar index has cooled off. And remember that dollar index, the chart that you see is down here, it had taken out this resistance once and this resistance at one, and now it wanted to break out from another resistance that's there in the top here out there, but failed, and then now dollar is cooling off, dollar index is cooling off, right? So it is settled somewhere at the 95.1 levels. So that means that's good for us, right? There is no direct correlation between the dollar index and the USD INR is not there, but USD INR currency pair also has cooled off, and it is at 74.1 kind of levels, right? It has formed somewhat a hammer, it fall and then rose up slightly. So 74.1 is where we are USD INR. No, the biggest highlight of that this week is that the crude oil has shot up 6.5% to 83.55 levels, which is really bad. It is at the all-time high levels. If you look at the charts, right? You can see them in the charts here. Look at this big move, right? It's like 35% in 6-7 weeks. That's big up move in the crude price that has happened due to some reason. So that is one negative thing that has happened. Although the rupee has cooled off. Now gold is attempting again and again and again from its famous support zone, long time support zone. It is again and again trying to hit the resistance zone, and this resistance zone where it is hitting is at 1817 kind of levels, 1830 and 1850, that kind of level, and it is getting rejected every time it hits there. So let's see if it is able to go above this and then break out of the channel and then further break out of this. That is the time when the goal is going to be making its bullish moves. The momentum right now is purely sideways, you can see that. So the momentum has to get back in the bull zones and remain there a few days, and that's when you will see that the real bullishness can come back. It's a weekly breakout cup and handle kind of pattern that is getting formed in the gold. If you look at another perspective of that. Now, two actionables for next week. One is IT sector is booming. I have Infosys. Infosys is having a box pattern, trending up steadily, consolidated and then broken out now. And the previous candle, last week's candle, if you see, it's a solid wide range, super bullish candle that you are seeing there. Right? There could be retracements, but for a positional play or a swing play, this stock is going to go like a rocket. Larsen and Turbo is weekly chart is what you see here. It had a rounding pattern, it broken out of that and then steadily going up. There could be retracements. Make sure that your stops tight on the alert candle or the entry candle, and pullbacks could be there because there is a steady up on the weekly basis that you can see there. It's going in a channel, so channel bottom could be the stops and channel tops could be the targets for the short-term swing trades. But yeah, the reasons why I'm going bullish on this is momentum is good, volume is good, and trend is good, and the price action also seems to be a breakout happening from a weekly rounding pattern and then forming a channel, right? But be cautious about a pullbacks that could happen interim, right? As long as it is maintaining the trend line channel, then it should be fine, right? So those are the two picks for actionables. One more actionable in the index, as I often do. The VIX is at the lower range, near to 16, 15, that range. So it could rise up. So that could give you back advantage if you go for double diagonal counter spreads like this that you see here. This strategy seems to be having a very good probability of profit POP, and max loss is less, and risk reward is not that great, but okay. right? You don't need to wait till the end of the expiry to do the booking, right? It will give reasonably good if you position it well as per your risk appetite, and you can exit much earlier, no, before Wednesday or Wednesday, right? So that is double diagonal calendar spread on the Nifty that you see here, which is giving a range of between 17,800 and 18,600. So remember, there is going to be big resistance 18,600 levels because it's an all-time high breaking. So most likely it may take more than a week to do that. So that makes sure that will make sure the price is staying below, and there is less than 18,000 is given up that easy, right? So that's the actionable on the indices, and then now we're coming down to the wrap up the final session. So the market view is clearly bullish, right? It's a bull rally is clearly shown by the price action on both the indices, and 18K is conquered back, and Nifty also is participating, right? So everything is fine. So short-term momentum, if you see, it's moderate bullishness, my view. The reasons could be the price action on the charts, the momentum turning to bullish on the not only the short term but the medium term also. Trend is also good, and the FIs are slow down in their selling. They're thinking, right, and DS continue to buy. So institutional participation is better. Price action, Bollinger Bands, momentum, trend, all of this is more than enough to show that the market is heading straight towards further continuation of the rally or a breakout from the all-time high previous. Now, there could be a lot of resistance at the all-time high level as I spoke before. So, BANKNIFTY is at a CIP change in polarity zone. So, whether it will move above the previous candle's high would decide on, and its participation will decide on how whether the rally is going to be a breakout or not, right? So, India weeks last week fell to 12% fall, and the range is on the bottom. So, that's why we have the calendar spread that was chosen, double diagonal calendar spreads. So vertical option spreads is always something that we have to use because we never know when the reversal, whenever we are reaching an all-time high, we have to be very cautious. Reversals, consolidations, pressure, right? Everything can happen at this zone. So you may get surprises where you are expecting that it will be a breakout for sure, right? So vertical spreads will hedge your strategies, and then you make sure that you won't be hit back too much, right? Now, anytime the VIX is going above 20, you have to be cautious. That's all. Right, so that's the view I have for next week, and I hope it helps. If that helps you to frame your own, trading plan and your own market view in some way, then consider hitting the share button, consider hitting the like button, subscribe if you have not done that. Thank you so much. Happy trading, happy learning. Thanks for watching again. Bye.